Major developments taking place today. A real shift is taking place at this moment, but most people, they can't pay attention because they are focused on one company, one ticker, or one news event. And all of this needs to be broken down today. We'll get to number one, the real effects, how this is impacting you. The second thing is the portfolio effect, looking at the financial side of things. I'm going to show you what sophisticated investors have been doing and what they can do. And if you stay until the end, I'm going to give you some really interesting news, but you got to wait until the end. Let's go. Let's start right here. Commodity index recoveries through every US business cycle since, and we could look at this 1933, 1970, and the most recent one. And certainly the prices of commodities have increased. We hadn't seen supply chain problems like this before. There are other factors to consider and so on. But the point here being that this has really surged. And of course, that impacts you directly. Prices are rising, prices are going faster than people can keep up with, and that is going to impact demand. We are even seeing inflation in Europe. I mean, can it be any crazier than this? This is an area that had been unable to create any inflation. They were begging for inflation. And now certainly the people are not saying the same thing, let me tell you. Euro area headline CPI and core CPI both moving up higher. And then you look at the breakdown of all of that, and certainly you know what it is. We are seeing the energy prices that have risen considerably, and so on. I mean, it breaks it down. But what is important is that you are watching certain individuals, companies, corporations, and institutions making more money than ever before. Shipping giants under fire for record profits and fees as this continues on. Of course, there are always people and institutions and so on that are going to gain from all of it. We know that. But in this case here, it looks like the shipping giants have done very well for themselves. There is no doubt about it. US grocery shoppers have their eyes on the price. The share of grocery shoppers in the US saying that these are the most important criteria when buying food. Low price being the first thing. If you would think that there is prosperity and there is, whoa, look at the job situation, it's fantastic, unemployment is this, the job numbers are this, wouldn't it tell you that maybe there's more affluence out there than what we would think? But no, instead, low-priced food is the number one factor when it comes to people and their shopping habits. I think it's really clear to understand what this all means. There is a shift that is going on today that most people don't realize. Most people haven't woken up to because they are looking at the mainstream financial media, the mainstream media in general, and then you have the mainstream YouTubers as the alternate. But my goodness, have we taken a leap? Veteran strategist David Roche warns markets could be at a turning point towards a bear market. Now, that's the actual stock side of things, but the economy as well. What is the number one key factor? I'm just going to spit it out. It's the Federal Reserve. You see, things really did change now more than what we had seen in many, many years. The Federal Reserve saying our whole deal right now is to slow down inflation. How are we going to do that? Quantitative tightening, that's printing less money and then eventually winding down the balance sheet, and then reducing or increasing interest rates. They have never spoken like this before. It isn't just, hey, we're going to do it and then we're going to back off from it. They could certainly do so, but at this point, they really, truly have to protect themselves, save face. They need to go through with all of this, at least to some degree, or they are going to lose their ability to move the markets. Remember that. This is what they want. Then you've got the individual companies. I'll move through them really quickly. Facebook shares plunge more than 20% on weak earnings. Big forecast missed. 20%? And this is unbelievable. I mean, this is PayPal, which we'll get into in a sec, but I'll just pull this up. Looking at Facebook, Take a look here. You can see what is going on. I mean, it is truly unbelievable to see it. Looking back, peaking out right here, 382 or so, coming down significantly throughout the period. Where was that peak? September 21. Just falling. I've been talking about tech stocks since this period of time, highlighting the fact that, hey, something strange is going on here, isn't it? That's right. I mean, we could also look at the broad indexes, and you could see the NASDAQ. Yes, this is the NASDAQ, the QQQ, bouncing up back in November timeframe. Then it fell, then it chopping back and forth. Then we had this big dip, and now it has come back up. People are saying, no, now's the time to buy. Stock comes down even further. Now's the time to buy. Do you want to be that person that buys it? Well, you could take that risk, certainly, if you believe in the very long-term trend. But how long do you want to hold on to something that is not going to perform? Well, you want to be able to put your money in the right place. You don't want to I'm just going to dollar cost average. Oh, that's the solution. Sometimes you got to wait a really long time. Look at what happened from 2000 all the way to 2014. I think it was about 14 years anyway, where the NASDAQ peaked out. And where did most retail traders buy? They bought at the peak. They didn't buy really early. They didn't buy Amazon when it was first going public. They bought Amazon way down the line. So of course, they are going to have to wait a long time to see their money back when they're buying indexes. You can kind of ride that wave, but a whole different story. Look, social media stocks crater after Facebook earnings. Looking through this, you're even seeing it affecting companies like Amazon. Twitter down 8%, Snapchat down 17%. You look at other companies that they mentioned in here, they have a whole list, but you could see Pinterest and so on. Look, this isn't good. It's not good for a lot of people. Look at what happened with Facebook. Facebook, a company that, Meta, I should say now, this company here growing massively. They're doing all these different things. Everybody is starting to use the word metaverse now and so on. You look at this, all of these different analysts, they are paid to ensure that they make their clients money by their recommendations. And they all said, buy Meta, buy Facebook, buy Outperform, buy, overweight, buy. Look at that. Every company you can think of is in here. Take a few. Morgan Stanley, Wells Fargo, Credit Suisse, RBC, BMO, JP Morgan, and Goldman Sachs here. Goldman Sachs is there as well. They're all saying, buy the dip. And it got hammered down. Was it appropriate to say that at this time? Seemingly no. So what has been, I'll cover PayPal in a second, but what has been the trade that many people could have been looking at through the period? I think it's very clear. Commodities, specifically oil, have gone up. I mean, I've been talking about this all the time. I've been looking at it since back in 2020, but no. Stick with what you know. Well, I think people should just know more. Why do you have to buy Amazon stock just because you buy things on Amazon? That's not really a good way to invest. You need to broaden your knowledge. And then you would have seen that you should have bought 7 2x4s instead of 7 shares of Amazon, because it would have outpaced the growth. Now, I'm just trying to make a point that that whole analogy is really all about looking at it in a different way. Where are the sophisticated investors moving their money? If I show you really quickly here, the growth of the Dow Jones over the past several trading sessions, clearly out of the 4 broad indexes, it's doing the best. And we know this because there's more value. They're trying to get into those big companies. Okay, they're not looking for the small caps. Look at what happened with the Russell. Very weak over the last long time, actually. And also, what's more affected by a rate increase? Well, of course, tech stocks, unprofitable tech names. All these companies here that are not looking very good in this hiking cycle. This is a change. This is a big change. Now, I've been warning about it for a long time, and I've been accused of everything. It doesn't matter. That I don't care about. What I'm doing is I'm trying to highlight the information way in advance. Even if you know about it too, wouldn't you rather know about something years before it happens? So, okay, here we are now. Here's the Fed tightening cycle. Okay, now usually what happens is tech starts looking less attractive, and then we go more into value. And then if things go to heck, then it's going to be a time in which we're going to see certain things, maybe gold, maybe land, maybe these things start becoming more attractive, and there's a big sell-off, and then cash becomes more attractive. All of these things, we know all these things, and I've been talking about it for a long time. Some people just, different story. Anyway, the RSX is the one, I don't know if I would want to call it a contrarian play, but certainly some people have picked up on this, especially since I covered it last. This is the RSX, okay? Essentially, Russia's stock market, while oil has gone up, and clearly oil and Russia being there, but because of what's happening with Russia right now, the stock market has declined, and I believe the ruble as well. But I need to double check that. It's been a little while. But oil's gone up. So, maybe if the tensions start to reduce, you could see oil coming down a bit, and you could see the RSX coming up. They could kind of meet in the middle there, because generally they do trade in line with each other. So I'm interested to see what happens. PayPal, really quickly, I saw individual retail investors, other channels out there saying, buy PayPal. People use PayPal. PayPal's fantastic. It's a buy. It's a great buy. The stock got absolutely hammered. Absolutely hammered. In fact, the biggest one-day drop, I think ever, 25%, down 25%. And they were telling you literally, like, you took that person's advice, that financial advice. The next day you lost 25%. Now you got to make that back. It's not 25% up to make it back. Think about it, right? You lose 25%. Now you got to make way more just to get back to where you were in an environment in which tech stocks not as favorable. Could the stock go up? Yeah, of course, especially after a dip like that. But you got to be careful, okay? And this is just another showing you all the gains basically through this growth. Gone. We're almost back to where we were here in early 2020. Crazy to say the least. And then natural gas. This is what I'm saying. Oil gone up. Natural gas going up. People need to pay attention to this and understand that, hey, if I don't know everything, and of course you can't know everything, but you need to broaden your horizons so that you can make more money, make informed decisions, protect your capital, protect your family. All of this. And the last thing, you stayed until the end. Who wins in this case? That's right, the bankers. The bankers win. They always do. The central bankers, even more so. And then the shareholders of the banks, I should say the shareholders of the private central bank, they win even more. Bonuses rain on Wall Street. Bankers in biggest payout in a decade. 15 million, 25 million. How many million is it going to be? How much is enough? These individuals making more money than ever before. And if inflation gets hotter, they could do even better. Maybe their stocks won't do as well, but I'll tell you right now, some people are going to be happy. That's right. But we need to stay astute. We need to be aware. We need to get ahead of all this information, even if that means learning stuff way beforehand. Not, I'm going to watch a video and I'm going to go buy that PayPal stock and get crushed 25%. If that was you, or you know somebody that went out there, watched those videos, they talked about that PayPal, you better go to them and say, hey, that wasn't cool. And maybe, just maybe, we should be thinking for ourselves. We should demand that these YouTubers, they take accountability for what they say. I am sick and tired of it, and now I'm finally starting to speak out about it just a little bit. People are going to be burned by all of this. So if you appreciate the information, hit that thumbs up button. It's right down there below. That's all I ask. Just one click of a button on the way out. If you haven't seen this video, why not? Where'd you go? Don't go anywhere. You gotta watch it. Click it. I'll see you there.